Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Joe Tigay, Managing Partner at Equity Armor Investments, for an update on Nasdaq-100 performance, volatility trends, and how investors can use EAVOL in their portfolios. Joe, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
All right, and we saw a lot of chop in the Nasdaq-100 over the past couple of weeks. Give us a market update and some levels that you're looking at.
Yeah, a couple weeks ago, I was looking at the 50-day moving average in the Nasdaq-100. I'm still looking at that. We broke below that. We saw that volatility. Now the market's on more stable ground. We're recovering, but we're still yet to be above that 50-day moving average. I'm looking at 13,150. That's the 50-day moving average. I'd like to see the market close above that before I see volatility come in and the market breathe a sigh of relief.
And any vol trends, anything you're noticing in VOLQ, any indications that we could see some more of this chop going forward or things could have leveled out?
Yeah, we're still seeing moderately elevated volatility. Of course, we have had some volatility recently. We saw, a correction in the Nasdaq-100 from February into the start of March. So that was a sign of some volatility. But we've come in, but we're still remaining at this elevated spot, this 2020 level of volatility. We haven't pushed back into the 2020 or 2019, excuse me, levels of volatility. And for me, just watching this market, worry about things like CPI and worry about the bond market. That's not a sign of low volatility. When you see the CPI move the market as much as it did, that's a sign that we're going to see elevated volatility for some time to come.
And give us a brief refresh of what EAVOL is and what kind of strategies you use.
Yeah, EAVOL is a long volatility strategy. We use it paired with a long equity strategy, such as long volatility, long the Nasdaq-100. And we're able to hedge out some risks to the downside, but able to use the volatility to our advantage to have that hedge pay for itself. Because in the end of the day, we expect the market to be higher over time. We just want to get there on a smoother path.
So it sounds as if the movement in volatility can actually help out this particular product. It's not necessarily to the up or downside that you're concerned about as much as it is to the movement in volatility.
Yeah, the more moves in the market, the better for this fund. The better that this fund will do. We're able to take advantage of the moves by buying and selling volatility back and forth. So in general, we have a long volatility position that acts like a long short. It goes up when the market goes down. That reduces the downside risk. Of course, that's very good. But a lot of other funds do that. But I think what gives us the advantage is we're able to take advantage of that movement, maybe be a little more aggressive than other funds. We're able to sell some stocks when they go up, buy stocks when they go down, and do the reverse with volatility. When volatility is going higher, we're able to harvest that volatility, put it back into equities, which now are lower.
All right. Sounds great, Joe. Thanks for joining us as always. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.